Watch Budget 2018 with Bloomberg Quint.
Good morning, you're watching Daybreak on Bloomberg Quint Live. This, by the way, if you didn't already know, is India's first digital live streaming business news service. I'm Alex Matthew. First, let's look at the headlines. Asian markets open higher, taking a cue from a strong close on Wall Street. Hindustan Unilever reports a strong set of numbers in the third quarter, and it's an operational strong performance from Bharti Infratel. Bharti Airtel, Yes Bank and Ultratech are the big earnings that you have to watch out for today. And India's aim is not to dethrone China as the world's largest steel producer, but to have a 126 million ton steel capacity by 2020. That's according to Steel Secretary Aruna Sharma. With that, let's turn to the international markets, and US stocks traded higher on Wednesday following the release of stronger than expected quarterly results from some of the biggest US companies. Tech stocks got a boost from Apple, which erased losses after announcing plans to repatriate billions of dollars from overseas into America. Let's go across to Bloomberg's Abigail Doolittle for all the US market action.
Wednesday's Wall Street session brought about a rally for stocks, with the Dow, S&P 500, and the Nasdaq all finishing at record closes. In fact, the Dow finished above 26,000 for the first time ever. Now, this did follow small to modest declines on Tuesday, and it seems that the Republican tax plan may have fueled much of the rally on Wednesday. In fact, financials were strong this after Bank of America beat fourth quarter estimates and said it could benefit from the U.S. tax overhaul. That last statement perhaps really fueling shares. Apple climbed as well, and Bloomberg News is reporting that Apple will return hundreds of billions of dollars in overseas cash to the U.S. In a statement, the company says it will pay $38 billion in repatriation tax. Now, the chips, those stocks were strong too, with the SOX, or the Philadelphia Semiconductor Index, climbing by nearly 3%, and some of the stocks that were strong, Texas Instruments and Intel, among others. Now, a bit wild on the session was Bitcoin, which dropped below $10,000 per Bitcoin, only to move back above that level with lots of lingering uncertainty about regulations and whether the cryptocurrency is in a bubble. And finally, the risk-on tone extended to the commodities complex, which was higher, and to bonds and the yen. Both of those haven assets fell as investors moved towards stocks. In New York, Abigail Doolittle, Bloomberg News.
Turning to Asian markets, they've opened strongly positive, taking cues from the record close on Wall Street. Equity benchmark indices in Japan, Australia and South Korea are all trading higher. You can see that the Japanese Nikkei is trading higher by nearly 0.6%. And technology shares are leading on the MSCI Asia Pacific Index. The market focus, especially in China, will be on the major Chinese data that's scheduled for Thursday, and that includes GDP, industrial production and retail sales. China's GDP is expected to have grown by 6.8% in the quarter ended December. Over to the Indian markets now, and Darshan Mehta and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Darshan, first to you, as always. Benchmark indices continue to hit fresh highs ahead of corporate earnings and, of course, the union budget.
Yes, sir, of course. Yesterday we hit highs both, in fact, in all three, the Nifty Bank, Sensex, as well as the Nifty. The Nifty continues to inch higher. The SGX Nifty has come off the day's high. It was up almost 60 points at one point of time, but nevertheless trading with a positive bias. So expect a strong opening. So the Nifty will open at record highs, nevertheless, if the SGX Nifty indicates a positive outlook. Most of the ADRs traded with a positive bias. ICICI Bank continues its good run. The IT pack also, Vedanta did well. HDFC Bank did well in trade. So overall, ADRs did well in trade. The other ADRs, Wipro and Tata Motors, continue to fall in the ADR space. So that's the cue that we are getting in. Now, as far as how the commodity basket is concerned, let's take a look at crude. Crude is now trading with a positive bias. Currently, you can see the NYMEX, Brent, both of them are trading with a positive bias, very close to the $70 barrel per mark on the Brent. So overall cues from the metals, so from the crude space, are extremely strong at this point of time. The other factors that you need to watch is this metal space. Now look at the closing on the LME, rather weak. Aluminium was flat and tin was flat, but overall you could see selling pressure that came in both in all these three in all these three commodities. So copper was weak, it closed down more than 0.5%, and zinc and nickel were down over 1%. So that was weak cues coming in. As far as the Chinese markets are concerned, look, they've opened marginally with a positive bias, so it's mixed cues because steel is trading strong. It's grown even higher, so it's up almost 0.7%. Aluminium has managed to come into the green. It was trading with a negative bias, but zinc and copper continue to be down. So the commodity pack in China is okay. As far as gold is concerned, gold has fallen in trade. The precious metals today, gold, silver, palladium, as well as platinum, all of them are trading with a slight negative bias to absolutely flat in trade. So no cues coming in from that level. As far as fund flows were concerned, FIs were net buyers yesterday. They bought in 625 crores. DIs also bought in almost 1600 crores. But it's the FIs that are actually putting in a lot of money in the markets when they are recording at new highs. So FIs have bought in 2500 crores in the cash market. DIs have bought in almost 1200 crores in the cash market. So significant amount of buying happening both on the FI side as well as DI side. What did well yesterday? The Nifty PSU Bank Index, because of how the bond yield reacted and what information was coming out in terms of additional buying by the government, that has come down. So the PSU banks moved up significantly, and following that, the Nifty Bank was also trading at record highs. So clear traction happening. The Nifty Media Index was down 1.5%, mainly led by Z. Came out with inline set of numbers, but the headline numbers were slightly weak. So Z led that down. So if you're looking at what contributed, the Nifty was up 88 points. ICICI Bank was the biggest contributor. IT as a pack has started contributing, but banks overall, ICICI, SBI and Axis Bank contributed significantly. HDFC Bank was down in trade and Kotak was down in trade, but overall 88 point record highs. Agam, what are the FNO cues indicating? Put writers must be a happy lot today.
They certainly are, Darshan. We've seen a lot of that traction, and considering we saw a little bit of a reversal of sorts, we are now inching towards 10,800. In fact, we did hit 10,800 and on an intraday basis yesterday late in trade. What we also saw was another 2.5% added towards longs as far as futures go. Let's also take a look at the Nifty Bank futures and what's happening there. So we have seen another 5% added out there, considering the banks moved, and this is largely on account of gains that we saw in the PSU sector. But what's happened to the India Volatility Index? Well, it's actually fallen surprisingly. So we really haven't seen too much expansion in options premiums, and now below the mark of 14. But when it comes to the put call ratio, that has edged higher naturally, given the fact that we saw strength in the Nifty. So now currently standing at 1.75. And as Darshan was suggesting, we see more writing in the 10,700 call. Substantial amount of writing there coming along too. So this could be a support level in today's day of trade, perhaps tomorrow as well. But moving in, plenty of changes with respect to the FNO band. So GMR, Infra and HDL move into the band. In terms of exits, we have Jet Airways, Reliance Communication, as well as Walkhart. And I'm watching out for one more stock which has seen substantial amount of increase in open interest towards fresh longs, is HDL. Plenty of stocks to watch out for, but once again, all eyes will remain on the Nifty and whether or not you can hold on to 10,700, that's one, and maybe move above, comfortably above 10,800 and hang in there.
Thanks so much for that, Agam. Let's turn to the rupee and the bond market now. And the Indian rupee fell about 15 paise to 63.89 against US dollar yesterday. And India's 10-year bond, that's the big talking point. The yield there fell sharply, as much as 16 basis points on Wednesday. Its biggest drop in 14 months. But that fall was warranted because those yields, as we've been talking about over the past few weeks, have been elevated. In fact, the new 10-year bond was issued and then began trading at the same level as the earlier one. The big fall in yields yesterday, though, was after the government said it will lower its additional borrowing program to 20,000 crore from 50,000 crore notified earlier. That's seen as giving the huge relief to the bond market, where experts said that there was a clear demand-supply mismatch. We'll have to see whether the changes, whether this latest move changes the appetite for the upcoming bond issuances. An expert that we spoke to yesterday had said that the government's move had something to do with the fact that a couple of the past few bond auctions were partially cancelled. But the other aspect could possibly have to do, of course, with the direct tax collections for the first 9.5 months of the current financial year. They've risen by nearly 19% to 6.9 lakh crore rupees. That's about 70% of the full year target. Nikun Jori breaks down the tax collection numbers in this report.
The government has collected about 6.9 lakh crore in net direct taxes during the 9-month period up to January 15, 2018. This means that the government has managed to collect 70% of its budgeted direct tax collection for the direct tax collection target for the current financial year. If you look at the gross direct tax collection numbers, there's an increase of 13.5% to 8.1 lakh crore during the same period, and refunds amounting to 1.2 lakh crore were issued during the same period. Now, if you look at the numbers that were shared by the CBDT earlier this month, it shows a major chunk of the direct tax collection came from advanced tax collections, which were at about 3.2 lakh crore up to end of December, registering a growth of 13% as compared to the previous year.
Now, when we're talking about banks, non-food credit growth at scheduled commercial banks has risen to 12% year-on-year, according to RBI data, which was released on Wednesday. The data indicated that outstanding non-food credit of scheduled commercial banks stood at 81.5 lakh crore as of 5th of January, as compared to 72.8 lakh crore rupees a year ago. Vishwanath Nair brings the full report.
Non-food credit growth for the banking system in the fortnight ended Jan 5th has come in at about 12%, a strong number coming in after multiple quarters of weak credit growth shown for the banking system. On the 22nd of December, for the fortnight ended on 22nd of December, this number was at about 10%. That was the first time that it had entered a double-digit category. Now this number has grown, of course. This can be attributed to base effect, because over the last few years the banking system has not been able to really grow its loan book due to the high NPA as well as the low demand coming in from the industrial segments. However, last week we saw Romesh Sopti, one of the first few bankers, to point out that the industrial demand was coming back for the banking segment. What he said was that in brownfield expansions, that is to say that existing projects wherever banks have been asked to provide capital to increase the existing capacities, that's where the banking system was seeing some growth, and people were coming up to the banks and borrowing from them. This is important to notice because the banking system has been struggling with a loan growth problem. It has been struggling with a high NPA problem. So if one of those problems gets resolved, then it is definitely a major positive for the banking segment.
Let's shift focus now from to the commodity market, actually. Jayesh Khilnani joins us with all the details there. Jayesh, what do you have for us?
Morning, Alex. So oil prices have been trading on the positive bias. If you look at Brent, that is trading above 69.50, and WTI is trading above the 64 per barrel mark. Now, all of this is backed by positive inventory data that we are expecting from the United States. So API is expected to report US crude inventory decline to the tune of about 5.1 million barrels for last week. And also, as far as brokerages are concerned, Citigroup has revised their target price for Brent oil for the first quarter of the current year to about 65 per barrel. Now remember that this is still good $5 or below where the current market is trading. As far as base metals are concerned, we saw a second day of losses for most of these base metals. The index itself declined by about 0.5%, and traders are now looking forward to the Chinese GDP and industrial output data later in the day. And zinc and nickel actually declined 1% each, while aluminium and tin marginally closed positive. If you look at the Shanghai Futures Exchange, most of these base metals are trading with a mixed bias, where zinc and copper have declined, while aluminium and tin, steel have actually seen an advance on the Shanghai Futures Exchange. As far as precious metals are concerned, gold futures were currently trading down about 1% and have now slipped below the 1330 mark. Now all of this is on the back of dollar index, which has seen an advance for 2 days running now.
Thanks so much for that, Jayesh. Now, India is on track to achieve its steel production target of 126 million tons by 2020. That's according to Steel Secretary Aruna Sharma. Speaking to Archana Chaudhary of Bloomberg News, she says India is not in a race with China, but will look to cement its #2 position as a steel producer in the world.
Becoming second largest producer, the Japan and us, we are always neck to neck. Sometimes they are ahead, sometimes we are ahead. Yeah. But yes, we will consolidate ourselves very soon, being the second largest producer. But we'll be far behind the first largest producer, that is China. Yeah. And we don't even plan to compete with it because they have a capacity, or they will plateau at a capacity of 700 to 800 million tons, which doesn't make sense because we will be creating global distortions in case India even think about it. So the best platform to settle will be 300 million tons for India in coming 10 years, because that will be our requirement, and India can continuously year on year absorb that kind of a finished product. So that is something which will be very stable and which will not distort the world market, which will cater to the domestic market requirement and sustain at that level. So that is what we are targeting. And what you asked for the figure, so 126 million tons this year, hopefully we will touch 100 million tons of production. In the calendar year, January to December, we seem to have touched that number. But April to March, let's see how it figures out, and it should figure out because month-wise production is going up. So I think maybe in April we will be in a position to tell you have we touched that 100 million ton figure.
Okay, because we're expected to rise up to 108 million tons at least in this calendar year. 126 million tons we're talking.
In 2018 calendar year, yes, by December we will touch 108. Okay. Definitely.
By December. And 126 million tons?
That is by year 2020. Well, see, we should be having a capacity of 150 million tons by 2020 with production ranging 126 million tons.
On to earnings now, and Hindustan Unilever's had a very satisfying third quarter. Agam Vakil's here to tell you all about it. Agam, the volumes are the big talking point, aren't they? Strong, even adjusting for the low base of last year.
They certainly are, Alex, considering we've seen a robust 11% volumes growth. But let me start off with the headline numbers, starting off with revenues, which moved up by as much as 11.5%. By this, I mean net sales. And excuse me. And we've also seen an expansion in margins coming in at around 19.6% in comparison to 17.6% on a year-on-year basis. What is it that's leading the growth in the revenues? Well, as we've mentioned, it's the volumes of 11%. But do remember, this is coming on the back of a low base where the comparable quarter saw a decline of as much as 4%. What is it that's driven volumes? Well, in the personal care segment, it's brands such as Pears and Dove. And in the home care segment, it is brands such as Vim. On the other hand, we've also seen margins expand. This is largely on account of the company's cost-saving initiatives. We have seen an uptick in raw materials costs, because of which we've seen raw material costs, input costs move up by as much as 24%. But on the whole, it's been a strong quarter for HUL and beating street expectations too.
Right. Thanks for that, Agam. Let's turn to one of the other big companies that reported earnings yesterday, and we're talking about mobile tower firm Bharti Infratel. They reported an operationally strong quarter. However, the third quarter profit missed analyst estimates, and it was pulled down by higher expenses. Somit Sarkar, who has done all the number crunching there, joins us with all the details. Somit, over to you.
Good morning, Alex. So on a consolidated basis, if you see, Bharti Infratel's numbers were operationally strong, but the outlook is very weak on this company. So the revenue was 7% higher to around 3,655 crore rupees, while EBITDA was 8% higher to 1,600 crore rupees. Margins, however, remained constant at around 44%, and net profit was down by around 6% to 585 crore rupees. It was an operational beat because the company was able to maintain its cost in this quarter. However, net profit failed to beat analyst estimates because of not so usual the finance cost of around 51 crore rupees, and because of higher tax expense in the third quarter of financial year 2018. Now, the revenue growth reported by company of 7% was the lowest in last 6 quarters, while the EBITDA growth reported by the company was lowest in last 8 quarters. Now, why the outlook is weak on this company is because in this quarter, the company saw around 8,562 tenants exiting from the tower company. And this is because of the consolidation that we saw in the telecom service provider space. We saw Reliance Communication, Aircel and Tata Teleservices stopping their business. And because of this, there was a loss of tenants of around 8,562 crore rupees. But out of this 8,500 tenants, 5,600 tenants still continue to pay in the third quarter. So the full impact of this tenancy loss will come in the fourth quarter, and that's the reason the outlook on Bharti Infratel is very weak going forward.
Right. Thanks, Somit. Do stay with us, though. That's a wrap on all the earnings that took place yesterday, but there's a lot of earnings that you have to watch out for today. We're talking about Bharti, Airtel, Yes Bank and Ultratech, which are the big earnings that you have to watch out for. Somit Sarkar is already with us, but we're joined by Shraddha Babla and Nikki Mirchandani, who have all the details on those numbers. Over to you guys.
So for Bharti Airtel, if you see the third quarter of financial year 2018 is likely to be another weak quarter. Revenues are expected to be down by around 3% to 21,000 crore rupees, while EBITDA is expected to be down by 5% to around 7,500 crore rupees. Margins are also expected to contract to 36%, while net profit is expected to fall by around 5% to 359 crore rupees. Now, net profit will fall for the 6th consecutive quarter, and the EBITDA number that the company is going to come up with around 7,500 will be the lowest in last 15 quarters. ARPU, that is average revenue per user, and the key number is expected to fall by around 11% to 130 rupees. So why weak? Well, there are two reasons. Actually, not two, there are three reasons. First one is the 57% cut in the interconnect usage charges would impact not only the revenue but also the EBITDA of the company. Along with that, there has been ARPU down trading in this quarter. That is, customers are opting for low ARPU, longer duration recharge plans, because of which the ARPU is expected to be weak in this quarter. And last but not the least, Reliance Jio, the competitive intensity that Reliance Jio brought in the third quarter also. However, Bharti Airtel's Africa business is expected to remain strong, and we can see some strong numbers coming in from there. And the things to watch out for in this earnings would be how the ARPU pans out in this quarter. Secondly, what is the capex plans of the company, how they're going to fund it, and what is the leverage ratio of the company to be going forward. Timeline on the completion of the recent acquisitions that the company made. Along with that, commentary on further stake sale in Bharti Infratel, as the company is looking to sell its majority stake in the tower company. And Bharti Airtel's outlook on the Africa business will be a key thing to watch out for in this earnings. Well, Shraddha, what are we expecting from Yes Bank?
Somit, just a quick recap of the Q2 numbers as far as Yes Bank is concerned, because that stock had actually seen a sharp downtick after the numbers. They had disclosed a gross NPA divergence of 6,300 crores for FY17. Now, having said that, that had also led to a big jump in slippages. Now, the bank said that they have fully absorbed the impact of the RBI reclassification in the second quarter itself, and that 6,300 crores of gross NPA at the end of March 17 had now become only 1,200 crores or so as of September 17, because some accounts were either sold, upgraded or recovered. Credit cost guidance they had continued to retain at 50 to 70 basis points, but in the first half of FY18 itself, the credit cost stood at about 47 or 48 basis points. So the street is going to be looking for any sort of upward revision as far as that credit cost is concerned. With respect to the exposure to NCLT accounts, they already have a provision cover of about 50% on the first list of accounts and about 39% on the funded exposure of the second list. So now, with that backdrop, let's go into what the expectations for this quarter are. Again, the focus will continue to remain on asset quality, because as far as the operational trends and business growth momentum are concerned, they have continued to show good performance, and that's expected in this quarter as well. So net interest income is expected to grow by 28%. Net profit growth is seen slightly lower at 20.3% on account of higher provisions. Net interest margins should come in flat at 3.6 to 3.7%. Loan growth momentum should continue. 30% growth is what analysts are working with. And as far as asset quality is concerned, again, no negative surprises are expected, because analysts believe that whatever had to come through has come in the second quarter itself. So we're going to be watching out for any commentary with respect to the stress sectors, any revision in management guidance for FY18 credit costs, the fact that the CASA traction continues or not, and the continued business growth momentum. So broadly, analysts will and the markets will keep an eye out for some comfort as far as asset quality is concerned, because that is what will drive the stock. So that's Yes Bank. But Nikki, what are we expecting from Ultratech Cement?
Not a good quarter, at least on operational front, that we're expecting for the company. If you look at the top line growth, we're looking at a 27% year-on-year growth there at a number of around a little over 7,000 odd crore. If you look at the EBITDA, we are expecting a 20% growth there at a number of 1,340. Margins, however, expected to be stable around 19-20%. And your net profit is seen coming down on account 24% year-on-year basis to 428 crore. Now, volume growth is expected to be around 22% at a number of 13.9 MT. If you strip off the JPA assets volume, then the volume growth is expected to be in the range of 8% on year-on-year basis. Now, operationally, weak quarter that I'm talking about is on account of consolidation of JPA assets, because we might just see a hit in EBITDA per ton for this company on a year-on-year basis, and a higher energy cost may also eat into the volume growth of the company, thereby percolating down in the operating performance, be it in terms of the margins or for that matter EBITDA per ton. Now that along with the assets, now the profit is also expected to decline on account of higher depreciation and the finance cost that we have seen once the JPA acquisition has happened. So that might continue to weigh on the company. The things that we might keep an eye out in this quarter would be your capacity utilization of JPA assets, your outlook on volume growth, and your outlook on pricing and demand situation for the company.
For that. Now, Shraddha Babla has spent just a little while telling us why Yes Bank is a stock that we have to watch out for. There are also several other stocks in the news that she has for us. Shraddha, what do you have?
Well, to start off with a lot of earnings, to start off with Alex, Mindtree, where sequentially revenues grew by 3% and net profit grew by 13%. Having said that, EBIT was up 52%, but the net profit impact is slightly lower on account of lower other income, but that was again something that the street was expecting. So good set of numbers there. Thirumalai Chemicals also very strong set of numbers. Revenues were up 40%, net profit grew almost or more than threefold, and EBITDA margins also grew by 700 basis points. Adani Transmission, again very strong set of numbers. Revenues almost double, net profit is up to 842 crores, and EBITDA margins have also improved significantly from 64% to 80%. Shrey Infra, again a good set of numbers. Revenues grew 24%, net profit came in 57% higher. Disbursements were up 19% for the quarter. Sequentially also we did see some marginal improvement coming in. DCB Bank is the only one. We have a mixed set of numbers coming in. While net interest income growth has come in at a strong 20%, net profit growth sort of lags at 12%, and gross NPAs have come in 9 basis points higher sequentially at 1.89%. That apart, we are also tracking a stock called Confidence Petroleum, where investor Purinju Veliat's Equity Intelligence Fund bought 1.2% equity in a bulk deal yesterday. So let's see how that stock reacts. To date, it was already locked at the 10% upper circuit yesterday, but we could see some further upside today as well. Amongst the other stocks that we're tracking is Ashoka Buildcon, which has received a completion certificate for its Mudhol Nipani Road project. Premier Explosives, here also we could see some positive reaction. They have said that ISRO has successfully test fired one of their motor components that they supplied, and Pitti Lamination, which has said that they've started the commercial operations at their Aurangabad. So a lot of stocks to track, Alex, especially on the back of earnings.
Right. Thanks for that, Shraddha. So clearly, those are the stocks that you have to watch out for that could move on the basis of news. But there are also a few big brokerage calls that you need to know about, and Somit Sarkar is standing by to tell you about all of them. Somit?
So the big brokerage call today we have is UBS on Small Finance Bank. Now, the brokerage is expecting the Small Finance Bank to report highest loan and revenue growth in the next 4 to 5 years. Now, they have initiated coverage on AU Small Finance Bank, Equitas Holdings and Ujjivan Financial Services, and they're expecting the loan book of this 3 listed small finance bank to grow 4-fold over FY17 to FY22 to 95,200 crore rupees. Now, they're expecting the revenue of these small finance banks to grow at a compounded annual growth rate of 29% over FY17 to FY20. They believe that the valuations are now attractive for Equitas and Ujjivan, and though AU Small Finance Bank has the best metric, but the valuations are expensive. Now, AU Bank and Equitas Bank are better pleased for loan growth because of their diversified product portfolio according to UBS, and MSME segment presents a large opportunity due to low penetration of institutional providers in total funding in this sector, and because of this, these 3 small finance banks are expected to gain because of low penetration in this sector. Also, the brokerage is expecting the scale up in low cost deposit base to drive reduction in cost of funds by FY22 for this small finance bank. Now for Equitas, they have a buy rating with a target price of 250. For Ujjivan, they have a buy rating with a target price of 575, and for AU Small Finance Bank, they have a neutral rating with a target price of 800.
Thanks, Amit. Well, that brings us to the end of this edition of Daybreak, but do log on to the website bloombergquint.com. There's a lot of stories that you can find there. Also, all you need to know is up next, so stay tuned. Thanks for watching.